Hi, Leslie Koo here. Now it seems that there is no agreed peace agreement uh, and no ceasefire between Iran and the US, and of course, including Israel. Markets are confused. The sovereign funds, fund managers, retail investors, traders, they are confused. They're confused not in the sense that they don't know what to do. They're confused by the flip-flop actions of the governments, Iran, US, and Israel. One day, let's talk. But within a short period of time, within 24 hours, no, we are not going to talk because you bombed one of my cities. Right? And yes, I opened the Strait of Hormuz. Then within a short period of time, oh, no. We are going to close it because there's no sincerity in terms of the ceasefire negotiations. Right? And later on, the US came and said that, well, we're going to block. You block the strait, I put in another level of blockage. So all these things, flip-flop within a very short period of time, make the markets very, very, very worried and concerned. So from what I see in the next few sessions, investors, traders, sovereign funds, fund manager, retail investors, they are going to engage a very cautious, conservative sentiment in terms of what they are going to do in terms of trading. Now, let's look at the oil price. We all know that the current situations is going to get worse before it can get better. So this is the baseline. And because of the current situations, there is a huge upward pressure, potential upward pressures on the oil price. So there is a high probability, high risk of the oil price hit towards $110 per barrel. And within the next few sessions, I do not rule out the probability, a high probability of the oil price hitting $115 per barrel. So it's very high chance all this will happen because of the fluid situations and of course the flip-flop sentiments between how should I say, the US and Iran, right? And we can see that the change of situations is as of now is because there is no confidence about the US, what it wants or what it's going to do. Because it gives if history tells us anything, we know that the US, in terms of negotiations, it's not really negotiations. It's basically that the US will tell the other side of the table, the parties on the other side of the table, that's what I want, you better follow. So, but at this juncture, in this era, that doesn't seem like working anymore. So that's why we see the flip-flop, the changes can happen within 24 hours. So that's why there is a very high risk, great upward pressure on the oil price, heading towards the $115 per barrel. At the moment, I see very low chance of downward pressure on the oil price. If it happens, I would think that it will hit up. So this one, I see the oil price in the next few sessions. Okay, let's move on to the gold. The gold price at this juncture this is baseline. The ceiling is still, I still see it at $5,000 per ounce. There is a high chance that it will move down, because when the oil price goes up, how should I say, the countries will need more US dollars to buy oil, and hence it will liquidate the US dollar assets and precious metals in their portfolio. So, and that will push the the gold price lower. At this stage, I see very low chance of the gold price hit below $4,500 per ounce. If it does, the pressure, the support momentum will start to build up. And at this moment, I see very strong support at the $4,000 per ounce level. Okay, that's all for this video. Thank you for watching. See you in the next one. Cheers.